All right. Today was very flat, so we'll do something a little different today, and we'll look at a few different charts, and I'll give you some things to consider. So let's crack open these charts and see what's going on in the stock market today. All right, so today's SPY was down 0.04%, so we went absolutely nowhere, and overall, nothing is changing on the chart. I still think above 420, there's a good chance this is ending the correction, and we're going towards 460. Now keep in mind, this is just speculation. If we start breaking down below 420, we need to start assuming something else is happening, which doesn't necessarily we won't bounce. It simply means we're more than likely going to continue into a bear trend of lower highs and lower lows. If this scenario plays out where we hold 420, then it's possible we start to form higher highs and higher lows and then start pushing higher to fill the gaps above and then possibly even retest the old all-time highs. Now, when we talk about the market, there's a few things we need to look at, and one of the most important things is the bond market. And currently, if we jump over to the 10-year yields, we can see the bond market has been getting obliterated, and we're well above where the market bottomed last year, which was when the US 10-year yields reached a peak in October of 2022. And it goes without saying we've clearly broken above that level, and we've gone absolutely parabolic ever since. And now you can see yields are finally starting to show signs of a peak, which more often than not typically means that stocks are at a temporary bottom, which means we can get a very impulsive bounce from these lows as long as the bond yields continue to fall from this parabolic rally. So watch the 10-year yield and pay attention to this peak, because we did get a pivot, which means we had a rejection from a high and a continuation to the downside, which could tell us the top is in the yields and we're getting some temporary relief. And then next, let's take a quick look at XLF, which is the financial sector. And there's no surprise here that this is looking very bearish with the lower high and then the lower low. And we do have a gap to fill right around 32.17. Now, in the event this is simply just correcting this bull rally, it is possible if we fill that gap that we will continue higher. But if you zoom out even farther, it's a lot scarier if we continue lower and we break down below these lows. This is going to be absolutely impossible for SPY to go higher if the financials are going lower. So there's a very important support here in the XLF, which is going to be right around this gap fill just above 32. So that is a very important support level for the financial stocks. And if the financials do not start going higher, there is just no way we're going to get a bull rally, because we are going nowhere without the financials. So do keep that in mind. So quickly looking at the triple Qs, we were only down 0.29% and we didn't break that critical support at 355. But keep in mind, if we do break that critical support, we're very likely going to 347 in a hurry. But you can stay bullish as long as we're above it. Simply understand we're going to 347 if we break below it. The Dow Jones had the hammer yesterday on high volume, and today we did confirm it. And then jumping over to IWM, we also had the hammer yesterday, and today we did confirm it by breaking that high. So I still think a relief bounce is coming, even if it's only going to yield a lower high before the next lower low in the Dow Jones and the small caps. Quickly looking at the VIX, you can see we're continuing to crush from 20. So as long as the VIX doesn't break above 20, we have the same condition we've had all year long, where we get VIX to 20 or 18 during pullbacks. That's the low, and then we continue into the bull trend. So no harm, no foul if the VIX stays below 20. On Bitcoin, we're currently still forming higher lows and higher highs while we're above 27,000, but we really need to see that bull breakout above 28,000. So watch that resistance level very closely. On Tesla stock, we filled the gap at 262, and now as long as we can hold this support at 255, we can push to the next resistance higher at 274 to 275. And if we break that, we're likely going into the 290s. If we can't hold support at 255, look for a retest of 244. And if we can't hold that, we're likely going to 230 and then the gap fill below 218. And then very importantly, looking at Apple, this is a market moving name that has now broken above the critical resistance at 174 and trying to break back above that negatively sloping 20 daily moving average. If Apple can hold above 174, it could mean the bottom is in, but it could also just be a little bit of an overshoot above resistance, and a rejection here would still send us to fill the gap at 167. So if we hold 174, that's bullish. If we get rejected, that's bearish. Rejection from 174 sends us to 167, and more upside and holding this as support sends us to fill the gap just below 182. So jumping back over the S&P 500, today was very boring. That's why I didn't want to waste your time going over all the levels that we've been talking about all week long. By now, you should know the critical levels, and you should know the bear and the bull scenario, and I still favor the bull scenario because I still think this is just a correction within a bull market. Bull markets climb the wall of worry, so there's going to be plenty of fear during this time. You just need to follow the chart. As long as you follow the chart and manage risk, you're going to do just fine. We're absolutely crushing this market on the Stock Channel Discord and Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links in the description below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.